Hi, welcome back to my channel. My name is Danae Wolf. I am a virtual CFO and financial clarity coach. So what does that mean? It means that I help entrepreneurs understand their numbers. So many of you struggle to understand the basic concepts of business accounting, as you should. It's not for everyone. If you didn't major in accounting, you really wouldn't need to know this stuff. But I really believe that the best way to gain clarity around your business and the best way to really scale to the next level is to embrace your numbers and understand them. Now, recently, I have had to pivot to focus on all things COVID relief. And that brings us to today, where we are going to be talking about PPP forgiveness specifically for our self-employed individuals. Now, this is my very first time going live using YouTube. So I want to just take a look at my other screen over here and see if this seems like it is actually streaming correctly. If you guys have been on here before with me, you know that technology is not my strong suit. So this whole YouTube thing is very new to me, and I just want to make sure that I am doing it correctly. So it looks like I see the video and it's there, and we should be fine. Okay, so hopefully when the video is done and I go back and play it, we can hear it, but it looks like it's working okay. So today, again, I want to talk about the Paycheck Protection Program and the changes that came in the Flexibility Act, but we are going to be solely focused on our sole proprietors, our self-employed, our LLCs. So these are individuals who are not getting paid with a W-2. You're not getting paid through a payroll company. Maybe you have employees who you pay through Gusto or ADP who are on W-2, but you yourself, you are self-employed. You are 1099 by your customers, by your clients. You are not considered an S Corp. You're not electing to be taxed as an S Corp. So this is, you should know who you are if this applies to you. So my sole props, my independent contractors, and my LLCs. There are some specific rules for you guys surrounding the PPP. So I want to get into the changes that were made that are really going to benefit you. Those of you who have been following me know that the long form forgiveness application is a bear. It's just not, it's not very user friendly. And for those of you who are sole props who don't have employees, it was overkill. There was just so much stuff on there that was not going to apply to you. So one of the main things I want to review is the fact that we now have an easy form. And I love that they're literally calling it an easy form. Like that's in the title of it, easy, because they knew that the initial one was just overkill. And it was really important that we could get this to our self-employed individuals. It's something that I was hoping we were going to get. A lot of people were hoping we were going to get. And it seems like they listened and they made it happen. So now we're going to have a really easy way for you guys to apply for forgiveness. And I'll probably do a video all on the easy form. But for now, I did link it in the comments at the bottom of the video, just so you guys could see the form yourself. But it's going to make your life so much easier. I know so many self-employed individuals were contacting me saying, this application is 15, 16 pages and it doesn't apply to me. Now this one is going to make your life so much easier. Now, the other change that I want to be sure to point out in regards to our self-employed individuals is that the Flexibility Act also gives the opportunity to go from an 8-week to a 20-week. Now, I want to be clear on who this is going to apply to. If you received your PPP prior to June 5th, June 5th is when the Flexibility Act became official. If you got your funds prior to then you can elect to go to 24 weeks. You won't need to contact your lender and let them know of the change. You'll simply fill it in on the easy form forgiveness application. There'll be an option to choose, are you going to do 8 weeks or are you going to do 24 weeks? If you got your loan after June 5th, you'll have 24-week option as well. So everyone can use this 24 weeks, but I really want to get into who it's going to make the most sense for. And this is, again, something else that people were asking for more time and they listened. And I just want to make sure that we kind of point out and give credit where credit is due, because I know there's so much frustration in the entrepreneurial community that these things keep changing, right? When we're dealing with the PPP, when we're dealing with the EIDL, there's so many changes. But when the changes are for the good, when the changes are going to help us, I just want to point it out because I know it can feel like a roller coaster when there are changes happening. But I kind of look at it as, if the changes are for the better and they're going to help us, bring them on. So these are positive changes that we are able to go to the 24-week. Now, I do want to discuss what is going to make the most sense for you. So I want to break down how the calculation is going to work, whether you are doing an 8-week or you're doing a 24-week. So if you are going to take an 8-week term for your PPP, then as the owner, as your sole prop, you are going to have a calculation of your Schedule C, line 31. So those of you not familiar with your tax return, whoever prepared your tax return, you can literally just reach out to them and say, hey, I need to know what line 31 of my Schedule C is for 2019. In 2 seconds, they'll be able to email that to you. And some of you may already have your tax return just like sitting in your inbox. If you have a digital copy of it, you can just scroll through and find line 31 of Schedule C. So if you have an 8-week term, they're going to determine your forgiveness by saying, we're going to take line 31 of that Schedule C. We are going to divide it by 52, and we're going to multiply it by 8. So essentially, they're going to figure out what is 8 weeks worth of your compensation for 2019. And that's what they're going to allow you to get forgiven for this PPP. Now, as you know, the PPP was 2.5 times your payroll. So it was a different equation to figure out how much money you were going to get, which means that some of you may have a situation where, and I'm just using random numbers here, let's say your PPP loan was $10,000, right? And we're hearing a lot of talk of, oh, you can use 100% of it on payroll as a sole prop. Well, I want to explain how that's going to work before some of you guys get yourself in trouble. So what's going to happen is if you use the 8-week option, right? The equation is line 31 divided by 52 multiplied by 8. It gets you 8 weeks worth of payroll. Well, if we know the PPP loan is 2.5 months of payroll, the PPP loan is more, which means that you would not be able to spend 100% of PPP on your payroll if you were to choose this 8-week option. Now, there are other forgivable expenses, such as rent and utilities and mortgage interest. But the reality is, for the majority of sole props, independent contractors, self-employed, LLCs, you don't have those other expenses. Like this applies to me. I don't have those other expenses. I don't have a facility. I work out of my home. So those individuals were in a situation where they had a PPP loan for, let's say, $10,000, and they were going to be leaving money on the table. There was just a portion of it that you would not be able to spend because you didn't have all of the forgivable expenses, right? And the equation for your payroll didn't allow you to utilize the excess, that was remaining. So you were just going to have a portion of the loan that you had to return or have turn into an actual loan. It wasn't going to be forgiven. Now we have another option. So this is how you can get 100% forgiven. So if you elect to go for 24 weeks, the equation changes to, we're still going to look at Schedule C, line 31, but we're now going to divide it by 12 and multiply it by 2.5. That is the exact equation they did to determine the amount of your loan, which means that you can now use 100% of your PPP funds because it's the same equation. Now, with the 8-week option or with the 24-week option, we do still have the caveat that we are capped at an annual salary of $100,000. So what does that mean? Well, if you do the 8-week route, it's $15,385. That's the most that you are going to be able to get. Even if your Schedule C line 31 was $400,000 for last year, it doesn't matter. The most that you can take is an annualized salary of $100,000. So in the 8-week equation, you're going to get $15,385. In the 24-week equation, you're going to get $20,833. Now, again, to reiterate, the 8-week equation only makes sense for those of you who may want the funds to pay for rent and utilities. But there is another reason why I think even if you have rent and utilities, it still doesn't make sense to pick that option. So stick around to the end and we're going to get into that. All right, so the other thing I want to point out, just because I really want to make sure that you guys kind of have all your bases covered. As you guys are probably aware, depending on the lender that you have spoken to, we're hearing a lot of different stories, right? And something I've consistently said is, all of this stuff is brand new, right? There's no precedent for it. We can't say, well, a couple of years ago, this happened. No, it's all brand new. So much of it is open to interpretation. It is very possible that you guys can go down this rabbit hole on YouTube and you're going to encounter someone else who is telling you something completely different about all this stuff. It's all open to interpretation, which is a good point. I should say, full disclaimer, not a lawyer, right? Not a lawyer at all. This is simply for educational purposes. It's my interpretation of what I'm reading from the Treasury's guidelines. So just want to throw that out there. But as you guys know, if you've been researching this even a little bit, people are giving different interpretations of it. So when this all started, when you guys applied for your PPP, there was definitely confusion as to how the equation should be done. So now that we have the forgiveness application, and we know that you can get forgiven for line 31 of your Schedule C, you have an equation for 8 weeks, you have an equation for 24 weeks. I want you to actually look at line 31, Schedule C. I don't want you to just say, I'm going to take the 24 weeks and I'm going to get my PPP 100% forgiven. The reason I want you to reference it is because what if the lender did the calculation wrong? So what if you look at your line 31 and you do the math and you say, okay, I should have had a PPP loan for $50,000. And somehow the lender made a mistake and your PPP loan is for $60,000. So now you've spent $60,000 because you know that you can get it 100% forgiven. And we go to apply for forgiveness. And when we look at line 31, we see there was a mistake with how much money you were given in the first place. So just to really cover your bases, I want you to reference line 31 before you come up with how much you're going to pay yourself. Now, even if you discover that line 31 and you do the equation, it doesn't match your PPP, I don't want you to just go ahead and spend it all just because that's the loan that the lender gave you. I don't think it's going to work to later just say, well, you gave me this, so I thought I could spend it. It's very possible the lender made an error, right? So I want you to just be proactive and check it. I can tell you I have had several people check and most are correct. Most of the lenders did it correctly, but I have seen several that are not correct. So had they just said, I'm going to opt for 24 weeks and I'm going to spend the total of my PPP, they would have had an issue when they went to apply for forgiveness. So again, just want you to be proactive, look at that and do the math yourself. Now, another question that I find that I'm getting asked a ton is when and how should you pay yourself? So there is not any type of guidance in regards to the self-employed on how you should be paying yourself. So let's say that your loan is your line 31 was over 100,000. So you have a loan of $20,833. We know that 100% of that is going to be forgiven, right? Because that's the new, if we use the 24 weeks, it's going to be the same equation. You can spend that all to pay yourself. Now, as a sole prop, you can transfer it to yourself. You can cut yourself a check, or it's something you can just reinvest right into your company, right? Because you pay yourself out of profits. So maybe you have some business expenses that you have to pay and you can't necessarily take the money for yourself. The point is, there's nothing saying you need to show a paper trail of how you paid yourself. But depending on your tolerance of risk, you may want to just write yourself a check or transfer the money to your bank account and have some type of a paper trail. There's nothing saying that you have to, right? If you were an S Corp and you were paying employees, or you yourself were an employee of your business, it does say you need to submit proof of payroll records. This does not say that you need to submit proof that you paid yourself. But again, if you want to just be, really, really, really careful, you can certainly document the transfers put into your personal account, or write yourself a check and keep a copy of the canceled check. Now, it also does not state that you have to pay that $20,000 out weekly, biweekly, monthly. There's nothing there. So in theory, you can take the $20,000 and put it all, $20,833, and transfer it all into your bank account in one motion. It's really open to interpretation. All I can tell you is it doesn't specifically outline how to do it. Just make sure that at some point, you are using it during you are transferring it to yourself or paying yourself during that 24-week period. And if you feel then something happens in the business, you're short expenses, you want to put it back, you can go ahead and transfer it right back in. That's how sole proprietors work. Whatever you want to do with that money, you can do it. But I just want to point out that there's really nothing guiding us on that. But if you just want to be super careful, go ahead and transfer it or write yourself a check. Another question that I'm getting asked a lot is, how does PPP affect your PUA? So for those of you unaware, PUA is the unemployment for self-employed. Sorry, I just want to be able to show you guys something on my screen here. Give me 1 second. So PUA is the unemployment for the self-employed. So a lot of you have been utilizing PUA, and then you get PPP. So the question is, well, what do I do with the PUA? So again, not a lot of clear-cut guidance. And the first thing I want to 100% advise you to do is call your local Department of Labor. Go to them directly, ask the question directly. But my opinion, and again, this is totally my opinion because I haven't read any guidance on it, I believe that if you are taking PUA, you do have to go in and certify how much money you are making each week. All of the states have some sort of a process on there for you to report income, because you can collect partial unemployment. It might be something where maybe you go back to work. Think if you're an employee, you go back to work, but your boss doesn't have enough hours for you. So you're on a part-time basis. So you can take a paycheck from your boss and take the difference from PUA. So they've had they've really loosened up the restrictions on unemployment for COVID-19. So they make you report each week whether you've made any money. So as the entrepreneur, as the sole prop, when you go in to certify each week, and your state might be different, maybe it's every 2 weeks. I live in Delaware, here it's every week. But when you go in, it asks you a series of questions. Every state's going to ask different questions, but they're basically trying to get at, did you make any money this week? So when it comes to the PPP, we just want to make sure we're reporting that, right? So maybe you take an approach of saying, for the entire 24 weeks, I'm going to do the math, divide it out by 24, and every week I will report that to PUA. Or maybe you say it's 2.5 months worth of pay. So I know that for 2.5 months, I am going to have to report the PPP to PUA, but then for the remaining of the 24 weeks, I don't have to report it because I've already claimed it. And what I would do is just take note of whatever approach you did. Make sure there's some type of a method to your madness, right? And document and say, well, I applied for PUA by doing X, Y, and Z. This is sort of how I calculated it. But I take that as a last resort if you cannot reach your Department of Labor, because I know that they are incredibly swamped, and I'm getting messages from you guys telling me you've been trying for weeks to get a hold of your Department of Labor and you can't. So if you can't reach them, use your best judgment. I just gave a couple of scenarios that I think would be appropriate. Again, not a lawyer, don't work for the Department of Labor, just my opinion of what I think would be appropriate. But make sure you document the approach that you took to really make sure that they know you weren't winging it, like you really did actually think about this. All right, and then, all right, so the next thing that I really want to, and this is where I'm going to have to share my screen here. So one of the biggest questions that I'm definitely getting asked is about the tax implications of the PPP. Now, for those of you who are sole props, there is actually really good news here. And it just has to do with the way sole props are taxed. So this is where I want to show my screen, because I want to be able to, I think if I can give you some numbers, it would, a visual, it's going to make more sense. But essentially what we know with PPP is they came out and said, the CARES Act said PPP would not be taxable income. Then the IRS came out and said, well, it's not going to be taxable income, but we are not going to allow you to deduct as expenses anything that you paid for with PPP, which would essentially make it taxable. So what I want to do, and let me see if I can figure out how to share my screen here. Is this working? Oh, hold on. I have to hit a different button, I believe. Okay. So, perfect. So here is what I want to kind of break down, because I know that can be a little bit confusing if this kind of isn't your world, isn't your space. So here is just a very, very ridiculous example of a profit and loss. This is we are not getting micro here at all. But we essentially have our sales, right? So our sales right here, that's going to be our revenue, right? Sales, revenue, same thing. Then I have some cost of goods sold, so any job supplies that you have. Then I threw in some office supplies, and I threw in some payroll. So we have our sales. We deduct these expenses. We are left with $39,000 as our profit, as our net income. As a sole proprietor, this is the number that you are taxed on. Okay? Now, let's say that PPP had been considered taxable income. And let's say you received the $20,800 and what is it? $33. Let's say that was what your PPP was. If it was taxable income, it's going to go right here on your sales. You can see that before I hit enter, okay, my taxable income was $39,000. If that's added, my taxable income is now $59,833. Hence, you would have paid much more in taxes. So the CARES Act said it's not going to be taxable income. Okay, so now it's not taxable income. We're going to bring this back down to $50,000. Now, let's review what the IRS has done. So the IRS has said anything that you apply for forgiveness with the PPP is not going to be allowed to be a deductible expense, which means that we cannot expense it on this profit and loss. So let's say that you were paying yourself $4,000 for your payroll on your PPP. So right here, I have a $4,000 expense for payroll, but it was done with PPP funds, which means I now can't claim it. So my taxable income is currently $39,000. I am now going to make payroll zero because I'm not allowed to claim it. Taxable income has now gone up, which means my taxes have now gone up. So this is the change that the IRS has made, and this is why it's having tax implications. However, for you sole proprietors, LLCs, self-employed individuals, your payroll is not paid via payroll. You're not allowed to take payroll through ADP or Gusto, through a payroll company. So it is never a business expense. So this line right here doesn't exist for you at all. We've never had it. So we now know that the CARES Act has stated that we are not going to put PPP on this top line in sales, right? It is not going to go there. So let's highlight it red. We also know that what we spend on payroll can't go in our expenses. But as sole prop, it never went on your expenses in the first place, which means that we don't have anywhere that we would have put it in sales. We don't have anywhere that we would have put it in payroll. We don't have anywhere to put it. So it's a wash through for us. There's never going to be anywhere where it enters into our profit and loss. So that $20,833 is not going to be added to our revenue, right? It's not taxable income. It's not going to be on there. And then the IRS says, yeah, but you can't deduct it. Well, we never deducted it anyways. It was never something for sole props. We couldn't deduct our payroll. So for us, we get that $20,833. That's the max. Obviously, some of you are going to have a different number, but we get all of it with zero tax implications. So I'm hoping this isn't something that they come out and say, whoa, we're going to tweak that. We're going to change it. But just through the way that you're normally taxed as a sole prop, due to the way that you are normally taxed, you are not going to have any tax implications of PPP at all. It's not going to go on as taxable income, and you can't deduct it, but you weren't going to deduct it anyways. So it'll never make its way onto there. So you will not have any tax implication. So by following, 24 weeks and paying it all in payroll, you are going to get 100% forgiveness with no tax implication. Now, if you remember earlier, I said if you opt for 8 weeks, the only reason you would want to do that is if maybe you did have rent and utilities. So maybe you're a sole prop, but you have a little office space or something. But then I said, I don't think it's the best idea, and we'll get into that later. Well, here's later. Now we're getting into it. If you have rent or utilities, those are normal expenses for a sole prop, right? That is something that would have to go on to the profit and loss statement. But because the IRS is saying you can't, you are losing that tax deduction, which means it is going to increase your profit. So it makes the most sense to choose 24 weeks, allocate it all to payroll, regardless of whether or not you are a rare sole prop who does have rent and utilities. Regardless of that, it makes the most sense to do the 24-week because then, as we've seen in the demo, your PPP funds are flowing in and out. It's not affecting that taxable income. But had we spent a portion of it on rent and utilities, because I can't put those on the P&L, that is in fact going to raise your taxable income. So just food for thought. I hope that that all made sense. If you guys have any questions, the best way to contact me is always going to be in my Facebook group, The Profit Factor. There is a link for that. We are very active in there, pretty much 7 days a week, 24/7. I'm in there answering questions. I've shared with you guys before, I have a newborn, so I do not sleep. So sometimes you are getting those messages at 3, 4 o'clock in the morning, but I am definitely devoted to answering every single one. So there may be a delay, but I do eventually get to every single one. So if you enjoyed this video, please hit like and subscribe. I would really appreciate it. And we will talk soon.